Hello and good evening, everyone. This is V-OneFX. V-OneFX is currently streaming a live trade opportunity on USDCHF on the minute 5 time frame. We have marked a zone based on our analysis as a supply from where price needs to drop again to achieve these targets. V-OneFX trading framework involves every trade to be split equally or at the ratio of 40% and 60% to achieve two targets. Target one will be the insurance of our trade, which will protect our capital in case the stop loss hits after target one. So even little bit drop here of 1 is to 1.5 will give us the insurance for the second part. And if the second target also hits, then we will be gaining around 3.5 times of our invested capital into this. So for example, if you're risking 5% of your capital, then if this trade is successful, then you will gain around 17.5% of you will have a gain of 17.5% of on your capital. That's a massive gain from a single trade. As price is approaching very fast, it is there is a resistance here above which many stop losses will be placed based on all the sellers who were expecting the price to drop from this areas. But it didn't drop and it's moving up. So once this resistance is broken, a lot of uh, buyers will get involved and buy stop losses will be converted into buy orders, which will be consumed by the institutions to drive the price down. That's the manipulation on the approach to a supply. If the supply has to hold, it's not necessary the supply will hold. That's why we put our stop loss just above this supply area. So entry is at this level and the stop loss will be above this. Price is approaching the zone. We have put our limit orders already. This is my analysis terminal. I don't put trades on the analysis terminal. This is passed on to the trading desk and trading desk puts it into the live trading terminal. We are showing that we are creating a double top here, although this is just a little bit on the edge of the previous resistance. This was the last resistance of price, and price is dropping after creating a double top. Double tops are considered as very strong resistance, so some that breaking that is an unexpected move which creates the liquidity in the market. If you ask what is our trading, what is our technique of analysis, we are simply we locate the supplies and demand zones on the chart that are fresh, live, and active, where the last manipulation happened, where one of the fighters lost their uh, hope by getting manipulated by the other side. So when a powerful institution who has a big pocket is trying to buy and there is another bigger player who traps them and takes the price down, we know that the buyers who got trapped over there will be exiting their orders on the first opportunity when the price reaches there. That is called squaring of the order. With that expectation, we hope for a bounce from this kind of supply and demand zones. To there is a complete different set of and studies which are involved into identifying this kind of zones that gives us a, a, a decent bounce of minimum 1 is to 2 or 1 is to 3. However, with our own expertise, we derived such zones and we have maintained a second target distance of 5 times the risk. So if we get a bounce of this much, then we will be getting a 3.5 times return on investment. We still have not hit the supply exactly, but it was expected that price will turn a little bit before that. So it looks like they're turning from a smooth area. So again, the buyers needs to get involved. So for such buyers to get involved, price needs to little bit pull back to maintain the theory of taking the orders from the base of after breaking a resistance to drive the price up. This is the minute one time frame view of the whole area. We have been reacting from the supply region. Supply region does not always need to be the end of the candle. It can be a little bit below also. So we have taken that looking into the lower time frame in the tick chart. It's a very strong price movement on the upside to reach into the supply zone that we are anticipating to bounce the price down. This will be a good trade if we make it happen. Price is coming back again into the zone. As I said that there was some distance left. You see that price did not exactly got into, now it has got into the zone. So now our position is triggered. We are anticipating a retracement from here to the downside and a fall till this target one over here. Let me shift this line a little bit on the left. This is our target one. Let's look at the chart from the lower time frame. So after breaking this resistance, there was a slight pullback and then price shorted up. So bulls are involved into now into this chart, into this pair, and the bears will have very ease in taking the price down from here because a lot of liquidity has been generated, a lot of stop losses has been hunted above this resistance on this time frame. See, we should be falling very sharply from there now. Once we achieve our first target, our trade is insured, our risk is insured because we'll be booking 50% of our investment on this target one. That will ensure our trade. But I think we should calculate the target one exactly, precisely by using the risk reward tool. This is our entry, this is our stop loss, and this is 2.24. So our 1.5 is a little bit above 1.6 or 1.5, somewhere here on this level. So this is our target one. This is 1.5 R, 5 times the risk. And the second target is at 5 times the risk, which is somewhere at the bottom. This is our second target. I'll pull this line a little bit on the left so that when it hits, we know that, yeah, target one is hit. So this is trading. This is like putting the stop loss, putting the entry, putting the targets before the price has reached to your level and waiting for the game to be played on its own by the institutions. On each of these supplies and demands that we choose to trade as per our framework of analysis, these are located at a very high liquidity zones where there is a game of huge transactions of orders taking place. How do we estimate that with the help of the strength of the resistance and the supports that lies below those supplies and demands, below or above those supplies and demands. So in the case of this supply, there was a very strong resistance just at the bottom. How we identify this as a supply has the entire analysis from starting from monthly time frame to minute one. We run an algorithm of analysis, and then we locate these areas where institutional supply or demands are pending to be triggered, and those are the zones where we place our trades. But if you observe, always most of the times such zones will be above a very strong resistance generally, because that is the indication where we figure out that once those resistances are broken and the hopes of the sellers are broken, the buy orders starts generating into the market, because the stop losses of the sellers are nothing but the buy orders. So also the breakout traders get involved into those areas of uh, on those levels where the resistances are broken. You see this how price wiped off this support just over here and entered into this next area of consolidation. And this next area of consolidation is nothing but a place where fresh demand came to drive the price up. Otherwise, it was dropping. It was trying to retrace, but then what happened? buyers exceeded the sellers and took the price up, so there is a buy interest again possible in this area. Our target is in this that region only. If we are able to break the buyer's interest, then the price can drive further below until the second target. We may look at the chart from a little bit more lower time frame, let's say 5 seconds, and we see that how there was a sharp empty pole. These empty poles are created when institutions are driving the price. They are consuming all the sellers at all the higher prices, which is available to reach to this supply where they are interested to take the price down from. And while doing so, they are breaking the resistances on the left, like it did here, which we saw on the minute time frame here. Buyers are trying right now to save their area of interest where they brought demand, fresh demand, when sellers were trying to push the price down, looking at the left side supply areas, because that is the place where seller interest came. Again, sellers were trying to push, save that interest, but buyers broke that. So that becomes a maximum pain for the sellers because sellers saw that this got broken. So they converted into buyers when the price again rose up and none of the supplies from the past were reached. See how how the fight is going on between the buyers and sellers, which is pulling up and down the price. It's neither going breaking this zone up or neither reaching our target. Again, it has entered into the area where our supply exists. So as soon as it comes up a little bit more, we have to watch, but we are not going to take any action because our stop loss is already there in place. We are not going to change the trade, of course. We just have to keep watching how patiently once the trade is already placed. Sometimes it happens that price wants a little bit more higher levels to turn it down because they might be experiencing a lot of buy orders are coming again into the market. So they are also taking them a little bit higher so that they can turn from a more higher place so that they can get more volume of buy orders to consume. This is one such kind of move. Uh, and There are various plays that happens in this kind of cases. Sometimes price breaks this high, goes deeper into the zone and then falls. Sometimes price simply falls from the edge of the zone. Those points also we can find out precisely, but this is a very lower time frame. We can't dissect the chart more into this because if you go to 10 seconds time frame or seconds chart, then already we see a lot of broken candles and all those stuffs. So it's very difficult to identify the exact spots in lower time frame. See, again, the price entered and broke this high. Like I said, it's a normal play, and it's a usual and play of the market. See, this is okay. This is not broken. So they didn't break this. Instead, they just went into the edge of the zone and then now again turning the price down. It has to break all these lows in order to get into this target which we have already placed and we are expecting. Only then we will be insuring our trades. Otherwise, we're losing 5% of our capital on this trade if price hits the stop loss. This will be our second live trade on live streaming on V-OneFX. The first one only hit target one. That was extremely in a lower time frame. Even this is also a lower time frame because higher time frames are not it's not meaningful to watch a higher time frame trade on a live streaming on YouTube because it may take several days to several weeks time to reach the targets. Friends ask me whether I'm a day trader or a swing trader. So the answer is wherever we find our setup, I trade those zones. It can be on a if it is on a higher time frame like monthly or weekly, it may take several days to reach the target. We may have to hold the trade for a long time because each of the candles is a daily candle, each of the candle is a monthly candle. They may take a longer time frame to reach. This is a 5 minute or 15-minute time frame setup based on the chart, and this kind of trades takes lesser time because you just triggered the trade here and this many minutes have crossed because this is in one time frame. So now we are approaching the target one and about to smash the target one. If target one is reached, then our net profit at that point of time will be 7.5% of our capital. We can exit both the trades for there, but this is as per our framework, we always aim for the target two for all the trades, and the target two is always greater than at a 4 hour or 5 hour distance from the entry. Just getting rejected from the supply, but demand is also, buyers are also pushing, trying to create demand and pull it up. It will be risky if we don't break this low, then it is going to be very difficult for the sellers to save this zone. There's a loss of connection back. All right, so we are approaching, and this looks convincing to me to reach the targets, at least the target one. Once this low is broken, then I will be convinced that we are going to the second target. It's trying to convince to the buyers that because price is making new highs every time, so again a new high will be made before breaking this low, which is a good opportunity for the sellers to get a lot of volume of buy orders and take the price down. And that is what is exactly happening. In this trade, we were using a stop loss of 8 pips, and our target is close to 21 pips, 22 pips. That's more than 1.6. Again, the buyers are getting a hope because price is turning up before breaking this support. That's exactly where the sellers get to consume all the buyers. As the bigger institutions get a huge volume of buy orders getting generated into the market, so they will be selling at this point. Institutions are exactly doing the opposite of what the market is supposed to do. So we are just applying those logics where market is supposed to do something um, and then we know that these are obvious places where they get to break the expectations of a lot of traders, so they get their pockets filled with the opposite set of orders. If they're into net buy, they're just doing the distribution at this point of time. If they want to go net short, and again a push was shown, but again buyers are getting hope. See how they're just maintaining a single level of price all the time when this kind of decisive moments happens, a place where obvious buyers and sellers are fighting. So you see that when this resistance gets broken and the next target is at least this support. This support is not reached by the price, but our supply has been reached. This was a supply that we marked. So they're expecting the price to move at least up to this level before getting down. But that is exactly where the institutes can break the expectations of the traders in a huge volume and they can get a lot of orders for themselves and do exactly the opposite of what market is expecting. So these are the kind of normal plays into the market. At this level, at this point, we would have gotten exactly the amount we risked in this zone. If it is 5%, here we have got the 5% back, but our strategy is to, as per our strategy, we exit our first trade at minimum at 1.5 times the risk that we're taking. So our target one is already set. We don't exit the trade in between. We either take the loss or we take the full target. If we don't do that in all the trades, if we are taking different targets, for example, in one trade we are taking 1.5 hour, another trade we are taking 3 hour, another trade we are taking zero point 0.5 hour, the performance of the equity curve will not be smooth, because when you're looking at a longer duration of equity curve of, let's say, 5 years down the line or 1 years of performance, when you see at a 5 years performance playing like this, the equity curve looks rising up at a 30 to 45-degree angle or even more, based on how much efficient you are spotting this supplies and demands. Because supply and demand is not a pattern. Like if I tell you that it looks like drop, base, and drop, it's not like that, because market does not follow any pattern. Market moves the price to the direction where the biggest player is trapping the smaller players. The one with the biggest money is trapping the smaller ones all the time. And how are they doing so? When majority of the players in the market are towards a certain direction, it helps the largest player to easily fill those orders in a huge volume, which makes a huge profit for them. If they want to buy few quantities, they won't get that many orders in the market. So the obvious places are when important supports and resistances are broken. That's the only obvious place where a lot of liquidity is getting generated into the market because of two actions. One side is getting stopped out, another side is getting involved with the play. It's been almost 20 minutes, 26 minutes since we are watching this trade uh, after it got activated. The trade is active, and it's a very good place for price to turn the for the market makers to turn the price down, and that is what we are expecting and watching. All right, so the buyers are now smashed. As I said, when buyers were thinking that this support will hold, they were slowly taking the price up. Buyers were getting involved, and sellers got a huge amount of buy orders from where they are now turning the price. That is the expectation, and that's what is happening. So this low will be broken instantly, at least. Then our target is to break this low. But in between, we have a demand where it was trying to push down, and then this push up happened. So near this region, there is a demand interest by some big player, which needs to be observed. But these are not so strong compared when such amount of sell volume has been executed by a more bigger player, based on the entire analysis from the left to right of the order flows starting from the monthly time frames. We dissecting each of the important levels where market structure got unexpectedly broken, or places where important resistance was sharply hunted without giving any time to the sellers to think, or a important support sharply hunted without giving any time for the buyers to think, those places generate high volume of liquidity in one single direction. That's exactly when the market maker or makers, if I am using S, then it would be more than not more than 15 or 5 or 10 at a single point of time. The top banks, that too, they may not be together all the time. So, as we can see, we are very close to our first target, which is 7.5% return on investment. Sorry, which is 150% of return on investment and 7.5% growth on the account, because the investment is 5% of the capital. We are very close to hitting the target one, and it's quite obvious that we are going to hit it because of this support. After breaking this support, this fall is indicating that there were a lot of buyers involved here and they all got hunted. And see, this doji candle is forming. If you do a little bit of research of doji in YouTube, you'll find what is the meaning of a doji candle. A doji is a flat body in the middle and two wicks on the both sides. This is called a doji candle. And when doji forms, it indicates the market players that the price is going to turn. It shows the exhaustion of buyer as and seller. Uh, the force that was driving the price down, which is sellers. So it's an exhaustion signal of for the sellers, and buyers don't. So buyers should have won here, and that is an unexpected behavior just at the level of this support is showing that the sellers got a good pocket filled, because there were a huge amount of buy orders getting generated because of two obvious incidents here. One is a support being present, and second is a doji forming. So that amount of sell orders which are being generated here is not by a small player, it's a big player, which is indicated by this drop. But we have also a demand here, and we don't know how big the demand player is. So once this support is broken, then we can confirm, all right, this is the this was a good uh, amount of sell that has happened in the supply, and then we are good to go till target 2. Target 2 is almost near the end of the range of this whole move up. So once this low is broken, that will be the next target for this player who is selling right now. Provided the buyer, the player, any other player who is interested to buy near this region is not stronger than him, then this low is going to get broken. And those indications, those signals definitely arise. There is a study definitely for that to understand all this, and we keenly observe these things in the market. See, this sharp drop, base and rally is a indication for the demand based traders to get involved into buying. That is exactly when the sellers will get a huge volume of buy orders and they will take the price down. That is the expectation. This is the demand area where market is involved into buying. So it becomes for this big player who is driving the price down right now to, and we have already hit the target one. Just an update. I forgot to mention that maybe. So we are insured on our trade for sure, and we are now worry free that we don't have to worry about the losses because we already have secured our position. The second part of the trade, which is a little bit more than 50 percentage of the investment that we have made into this trade, has its target here. So we have already done the splitting of the risk. This is nothing. I was just drawing this to show that this appears as a demand area for the retail traders or many other smaller uh, or any smaller players or any player who is there in the market, because this is taught that any drop base rally is a demand zone. So that is exactly where price is rising up. Again, the sellers are filling those buy orders. Now the drop will be quite sharp. If in real there is a bigger player who is involved into selling, then the drop is going to be very sharp. This is a minute 5 time frame, and we are targeting here. Second, first is already achieved. See, on a higher time frame also, we are at a downtrend in the market. Alright, so we'll go into a lower time frame and we see that price is still dropping and we expect that our target will be reached. We'll follow up on this on another video if it is not reached by tonight. Till then we can see or watch some other price and figure out if we have any trade or not. Let's look at US Tech. This is US 100 index. Just sellers have been able to successfully complete a swing on the downside. Now, when I say sellers were able to complete a swing on the downside, it looks very obvious. Yes, they have, but it has got a lot of relevant informations inside this. That is what we look into. We look into places where price hunted the stops with our observation and analysis, and then we patiently wait to take a trade on those levels. To create a flag or a swing like this from low to high, then to a lower low, it takes billions of dollars in the forex market for one participant who is acting to make this a successful swing because he is safeguarding his interest by not letting the price go against him. That's the top players, top banks, top 15 banks. If they are into the market and they're trying to save this, so there are billions of dollars invested in this entire move from here to here till the lower low. So to make that successful, they manipulated, generated orders against them so that they can consume them and take the market down. For instance, this whole swing that has formed is a significant one, where we see that the velocity of the move of price was very strong down, then just a limiting this flag, whole flag, and then falling down again sharply. So that's why this is a interest of a big player to keep the or take the price down. This is the information that it gives, this whole swing from low to high to lower low. Inside every big swing, there are smaller swings also. Like this is a big swing, and inside that, there is a smaller swing. So, what this swing, whichever bank was making this happen, had a huge amount of sell. They were already gone into net short from net long. So they wanted to make their net short again consumed to some long orders down below. When the prices falls, the general market is on buying side, so they get easily they can distribute their orders, whichever they have accumulated. Accumulation of orders can be buy or can be sell. I'm not talking about the Wyckoff accumulation. Wyckoff accumulation is only indicates for stocks, and that's why they call it accumulation of buy orders only. We need an eye on all the time frames to understand because higher time frame demands and supplies are more stronger than the smaller ones. If price is reacting from a demand, higher time frame demand on the downside, then the higher time frame supply on the top will be easily broken. Lower time frame supply on the top will easily be broken because higher time frame is the playground for the big players. And we this is okay, this is different chart. We are we were looking at USDCHF. Again, there is a pullback. Again, the buyers are trying to hold this support on the lower time frame. This support, they have not broken it yet, and that is pushing the price up, and they have brought one resistance is broken. So it is a good opportunity for the bank to s- sell right now because we can observe that a lot of buy orders are getting generated in the market. I've switched the chart to US Tech again. There was a cluster of drop that was enabled by this whole swing on the left, and it extends to the right where price was actually being held down by this whole swing multiple times. You see that this is the first time, this is second time, then there is third, then there is fourth, there is fifth, sixth, and on the seventh time it was successful to break this, but after breaking it could not break the high, so it again was this there was a supply here which was being protected by one of the banks, and price dropped and broke this low, which is an indication this there is another chance of powerful supply at the top. So we need to go and check on a lower time frame. So we see that there is a drop and then a base formed, and again this drops. So this is the source of the whole downside move on the left, downside move on the right, sorry. So this move is responsible accountability is this supply zone. We have a lot of when the supply will be approached by price again. There are a lot of highs on the left which are there to be broken. But after breaking a low, like in this case, when it broke this low, it went again inside and consumed all the orders which were pending and then dropped sharply from there. So the supply is weakened by the testing of the price back again into that. When price visits a demand or a supply already once, it is the demand and supply is weakened, and it's not necessary that price will hold that price will be held by that supply or demand one more time. This was a important low before. This was the first low that after price was trying to retrace inside after breaking the supports on the left. These two supports were broken on the left, and then price was trying to retrace back again inside, but it was pushed down, and this was the first low that was created because this high is lower than this. So this low is an important because this is the first low which where buyers were trying to fight to take the price up and break this high, but they failed at this point. So the buyers got trapped at this level where sellers pushed them, and while pushing, sellers again might have left some clean orders, which again made them bring here, and then prices again dropping down. Let's look at some stocks, some US stocks. American Airlines. What's the situation? War is going on in Western Asia where US is burning a lot of money from their defense budget. So stock market is crashing on this smaller period of time. Since January 2026, the market has already started falling. Though when the war started, market already has fell sufficiently. It may or may not be the beginning of a downtrend on this stock. For that, we need to check on a higher scale. On the USDCHF, on the trade that is active for us is now acting going down again because as I said, when this high was broken, again people will be on the buy side. That's why it is easy for the market to take it down. Hopefully, we'll be achieving the second target. So we'll be following up with this on another video in the next session. And till then, have a good time.